Let's get into that market picture now. Japan has denied reports that it made too many concessions in trade talks with the United States. A Japanese official says the fact that Tokyo and Washington were able to reach a broad agreement was indeed valuable. U.S. President Donald Trump and Japanese Prime Minister Shinzo Abe agreed on the principles of a trade deal. The deal would probably be signed in New York next month. If finalized, the deal would cool what has been a trade dispute between the two allies, just as a trade war between the U.S. and China begins to escalate. Some Japanese critics say that Tokyo gave up just a little bit too much. Let's continue with the market picture out in the Far East. Then Asian equity markets tanked and the yuan hit an 11-year low today after U.S. President Donald Trump ramped up his trade war with China by hiking tariffs on more than $500 billion worth of imports. However, dealers paid earlier steep losses after the president said the two sides would restart talks soon, providing some much-needed calm. The decision on Friday stunned investors who ran for the hills, hammering European and Wall Street stocks, while safe havens such as the yen and even gold and even bonds, of course, were the go-to assets in times of turmoil and uncertainty, began to surge. The Tokyo market fell the hardest as the Nikkei began to fall 2.2% today. The Hang Seng in Hong Kong was 1.9% down. That sits at 25,608. A few issues and concerns, of course, around the anti-government protests that are happening in that country too. So perhaps sentiment around that. The Shanghai Composite out in the mainland giving up 1.2%. In the United States, Wall Street tumbled on Friday after the U.S.-China trade war seemed to have escalated in dramatic fashion. President Donald Trump demanding that American companies seek alternatives to doing business with China after Beijing announced its own slate of retaliatory measures. The Dow Jones Industrial fell 2.4%, 25,628 points. The S&P 500 lost 2.6%. That's at 2,847 points, while the Nasdaq Composite sat at 7,751 points, dropping 3%. Let's get a picture then of how things are faring out in the European market then as well, then as things continue to perhaps flare up with that trade war between China and the United States. The question becomes just how far is Donald Trump and President Xi Jinping going to go with regards to this? One day you see hopes and believe that perhaps there will be a solution in sight, and other days, certainly not. Friday was one of those days. But look at that, a bit of a mixed picture out in Europe thus far. Only the FTSE 100 out in London seems to be attracting that negativity, which has indeed come through from that trade war, while the rest seem to have headed a little bit higher, with the DAX and CAC 40 out in Germany and France, respectively, doing fairly okay. On the local front, of course, the mixed bag has certainly come through from last week, and having just snapped that 4-day losing streak on Friday, unfortunately today things have gone back into that negative sentiment. Back below 54,000 points is the JSE All Share, not faring too well. A big fall for Tencent out in Hong Kong, around 3% or more, also a little earlier this morning. So that sentiment means that its biggest shareholder, that's Naspers, who holds around 31% in Tencent, certainly feeling the pinch then, and also falling as the industrials went down, now sitting below 70,000 points, and financials also attracting the negativity. On the resource share front, it does seem that some positivity is filtering through, and a lot of this, of course, based on that safe haven buying. Investors indeed looking to get into the gold stocks and gold itself as a metal, so that certainly means that that will go a little bit higher. The platinum counter sitting just below that 40-point mark. While on the commodities front, as I said, that safe haven buying is really the sentiment around here. Gold headed up beyond that $1,500 fine ounce mark, now sitting at 1,530 an ounce. Platinum firmly, they're headed higher today, so a much better picture for it at 862, while oil sits just below that $60 a barrel mark. Key questions around demand have certainly filtered into the equation. Just how far will that trade war go, which would obviously impact on demand then for the market and for oil, and that will certainly affect things along. Final picture then at the rand, and here's how it sits. Weakness for the local currency at 15.27 against that US dollar, just below 17 rand against that euro, 18.74 British pound, indeed getting hammered and sustainably staying above that 15 rand mark. Let's get to chat to Bright Khumalo, who's from Vestact Asset Management. He joins us live then from the Johannesburg Stock Exchange as we unpack that market picture a little bit more. Bright, thank you so much for the time. But so the sense of negativity filtering through then, of course, yes, from the trade war. how many more times are we going to be speaking about this trade war and just hoping for some kind of resolution?
Look, at this point, I think the President Donald Trump is just, cementing his place out of office, by the end of his tenure, this first tenure. I don't see him back again because, those tweets have, caused a lot of collateral damage and, taking away from the wealth of Americans in the rest of the world, like South Africa, for example. So I wonder if really he's going to make it the second time around, Arabil.
Yeah, the question then becomes, with the trade war then escalating, yes, China kind of did do it first in this round, having put on that $75 billion worth of tariffs on those goods. Then Donald Trump saying $500 billion. He just went all out. By the end of the year, effectively, all Chinese goods exported to the US will have some kind of duty on them.
Yeah, well, that was his reply, and then he eventually, toned it down a bit and said he might have reiterated or maybe replied, a bit more aggressively than he had expected. So he took that back. So this reminds me of, the spoiled kid in the neighborhood, that has a lot of toys, and he finds out that his neighbor's got the newest toys, and he comes out and just takes out all of his toys at once. That's exactly what Donald Trump did here to show off, but unfortunately, that's not realistic, and that's not how these trade wars work. And of course, and China did show us, especially to show us that exactly, like, China does have a lot of ammo in their bag, and they have a lot of things that they could potentially do to reiterate or to retaliate against the Trump's trade wars. And those automotives that they said 25% and spare parts is a good example. And of course, that $75 billion US, like you said, in items that they might be putting into trade tariffs in there. So it's at this point where we are in terms of which country is winning. Both countries are big losers, like in every war. No one's winning at this point, and I don't think anyone will win in the end.
Yeah, and the rest of the world seems to just be collateral damage, unfortunately. So we're certainly getting the brunt of it. How much impact is this having on the market, though? And I only ask, yes, fine, we see a lot of red, but what I mean is the sustained negativity of the last year bringing about this trade war means that you're not really sure of where to put your money, and you don't know how long this will last for. Are we perhaps putting our bets on the fact that Donald Trump indeed won't last the second term?
Look, Arabil, contrary to popular belief, it hasn't been that bad for markets. Because if you compare it to where we were last year in October and today, we actually, pretty much the market is up about 1 or 2%. So we're pretty flat. But if you look at year-to-date numbers, obviously they're a bit distorted there because they look a bit higher than they actually are. If you look at at the base. But in terms of going forward, what it means for example, manufacturers in different countries, especially the ones that are affected, or actually individual companies that operate in these industries that are affected by these trade wars, they're going to suffer. I mean, we saw automotive stocks, for example, as the Chinese government was saying that they're imposing 25% tariffs on that. All automotive stocks were down about 4% on average, and that's not good for the market. That's not good for the wealth that's been created or that we're trying to create, for pensioners. That's just the one angle. I mean, this goes all the way to all kinds of manufacturing and the industries that are involved in this trade war, outside and inside of the US and China. So it's everywhere, because you might find that, for example, a company like Hulamin, which provides certain materials for an automotive company in the US, gets collateral damage as a result, because it's going to now basically cost more for them to send that to the US, and the US is going to sell that for a bit higher than they anticipated, which increases their input costs as well, etc., etc. It becomes this fulfilling prophecy that's not positive.
Yeah, that self-fulfilling prophecy will certainly hurt on that front. I just wanted to ask, in the midst of all of this, we've seemed to have forgotten that Jackson Hole, Wyoming was the state of the central bankers meeting just last Friday, and they came out with sentiments saying that, look, interest rates are not headed higher anytime soon. Let's get used to that fact.
Of course, we couldn't actually see that trickle down into the market because as Jerome Powell was in the stand there talking, Trump started tweeting, and which I think had a bigger impact to the markets than Jerome's statements, which he said he would actually be happier to keep rates low, or maybe even further, maybe not in those words, a further lower interest rate to make sure that the U.S. Economic engine continues to fire in all cylinders. We haven't seen that, but to be fair, today the market, the S&P 500 futures and the Dow Jones futures, they're up about 0.2%. They were as high as 1% before I came here, so that's going in the right direction. So finally, some good news is trickling down to the markets, and it's back to the face-ripping bull market that we've seen in the past 6 months.
So that bull market is still raging on. Is that what we're saying here?
I'm not saying that. I'm just saying where we are right now.
Yeah.
It seems that's where we're headed.
Yeah. All right. Very quickly, that rand 15.25 against the US dollar, stability above 15 rand. That can't be the new word, surely. We can't have stability above that mark.
That kind of. For my own sanity and clients' sanities and South Africans, I don't think that's the new normal. The rand has to be grossly undervalued at this point. I went to Kenya and I came back. It was a rand weaker, and I've only been away for a week. So that shows you, the kind of exuberance that's in the market. But where we are with regards to the buyers and sellers of the rand and investors, I guess this is fair value for now.
Yeah. Look, it kind of teaches you not to go to Kenya without me. That's kind of what it just showed you there on that front. Right, always good chatting to you. Thank you so much for the time, bud.
I'll include you next time.
Great stuff there. Bright Kumalo from Vestec Asset Management helping us unpack that market picture a whole lot more. We'll continue with our breaking news.